New trader, long timer, or something in between. It almost doesn't matter because you're all contending with the same force, rising volatility. Whether you trade options, futures, stocks, or almost anything else, it can be your best ally or your biggest foe. When the VIX goes from the teens to the 20s, 30s, or more, you have to adjust your strategies. To help, I have a fantastic husband and wife trading duo joining me on the Money Show Money Masters podcast this week. They have decades of combined experience, and you're really going to benefit from what they have to say. They're Bruce Marshall, Senior Director of Options and Trading Income at Simpler Trading, and Tammy Marshall, Technical Analyst at ElliottWaveTrader.net. Welcome to you both. Bruce, Tammy, I really appreciate you both taking some time out to talk to me, especially in a market like this. I mean, geez, we schedule these things kind of in advance and don't know what's going to happen, and here we are. So I just want, before I get into talking about the market, about tactics and things like that, since I haven't had either of you on the podcast before, why don't we start with you, Tammy, and just tell me a little bit about your background, what it is you do, and what you do at ElliottWaveTrader.net, and we'll go from there.
Okay, so I am a Fibonacci Technical Analyst, and what that means is basically I use Fibonacci numbers to make predictions on the stock market. Most people that are traders have heard of Fibonacci numbers, the 618, the 786, and there's a lot of other ones that I use in addition to that, but that's basically what I do. I've been doing it for about 12 years now.
Okay, great. Bruce, same question to you. I know you work in the options and income over there at Simpler Trading. So what's your daily routine involve?
Right. It is, of course, we're trading every day. We teach a lot of different strategies, obviously, primarily options, but we do futures and other things as well. Day-to-day trade in the market. I trade the S&P a lot. And we're just trying to navigate this volatility. And I've been in the industry 36 years now. Had to think about it. And, we don't see this kind of volatility very often, and it's actually pretty fun to get into this kind of movement. So we'll see.
Yeah, so let's talk about your background. How did you first get involved in actively trading the market? What attracted you to it? And sort of how have you seen the business evolve since you got on board?
You go ahead.
Yeah, well, I guess my story is a little more simple because I actually became a trader because of Bruce. Bruce is my husband, and we met about 17 years ago, and he started teaching me how to trade on the stock market. And at the time, I was a special ed teacher. And fast forward a few years from there, we ended up starting to have children, getting married, having children. And I wanted to learn how to do something that I could do from home. And I was already very interested in trading. And then I met the Fibonacci Queen, who is Carolyn Borodin. And she became my mentor. And I learned everything that I've learned about Fibonacci analysis from her. That's why I'm known as the Fibonacci Princess. So I've been doing Fibonacci work for about 12 years, but trading for about 15.
Got it. And yeah, same question to you, Bruce. I know you've been in there for a couple decades longer. Just what attracted you to the business, and how have you seen it evolve?
I was at the time, I was coming up to get in the business world, and it was the 80s, the roaring 80s, and it was great. Of course, everybody was making money on Wall Street. I wanted to get in on that. And so I actually I got in the industry officially licensed and everything in 1989, right after the 87 crash. And I worked on the institutional side. I worked on the retail side. I worked on a bond desk, wore all the different hats. And as time goes on, you really fine tune what resonates with you and what works best for you. And that's what I've done over the last 15, 20 years.
Got it. Well, let's talk about how you trade a market like this. I mean, again, so much has changed versus kind of where we were on January 1st to where we are now. When volatility does what it's doing, how does that change your approach to the markets? And I guess I'll start with you, Bruce.
You definitely have to, one, tighten up your time frames, because this is absolutely not a buy and hold market. In trading the volatility with options, I use shorter term, of course, like weeklies, and I trade the SPX a lot. Where I'm kind of switching to selling some of the premium, but again, you have to be careful with that. But all the strategies kind of ebb and flow with what's going on in the market. And right now, of course, the volatility of VIX is 40, 50 now, as opposed to 12 or 14 or whatever. very different strategies. So we might switch from calendars, diagonals to credit spreads or whatever, but you have to be very aware of that volatility because that directly affects the pricing of all the options that you're buying or selling. So it can be good or can be bad. You just have to know which strategy to use.
Sure, sure. Tammy, as far as Fibonacci analysis, what does it help you do in a more volatile environment? How does it help you trade the markets more effectively?
Well, I have a great example of that I actually talked about on X and in my trading room, of course, which is where on the SPX cash monthly chart, we actually came down to perfect symmetry of the move that happened in 2022. It happened to also align with the 50% retracement of the 2022 low, which was in October, to the more recent February high that we've had this year. And then it also had some other extensions and other Fibonacci numbers on it, and it formed a really great cluster. And that's where you saw us bounce from yesterday. Then what do I do? Of course, I look for the overhead resistance, not just on monthly charts, which I don't really have a bounce on that one yet, right? That won't be until May if we continue this move up. But I'm looking at daily charts. I'm looking at intraday charts, such as 120-minute, 30-minute, 10-minute charts. I go all the way down to very low time frame charts to try to see where we could potentially fall. And today we did fail at time and price resistance on my 120-minute charts.
Got it. Okay. And as we're talking, we're recording on Tuesday. They'll broadcast on Thursday. So, we'll see where markets are at. My question for you in this environment, are there any hard and fast rules, more guidelines, things that you would say if you're talking to somebody in a chat room or trading discussion room, what are you telling them that they need to be really aware of here?
I'm telling them to size small and make sure you're placing the stops. Make sure whatever your risk tolerance is, your account can handle. So, that's a big part of it, right? And the other thing is that I'm telling people is if you haven't been trading, but for maybe a few years, you may want to sit this time out and just learn. And it's a great time to observe and learn. This is a professional traders market that we are in right now. And I think it's a very big blessing for those people that haven't been traded very long to be actually be able to see this kind of market. And it's different than a market that anybody else has really seen. We've taken out a lot of those previous downturns that we've seen. We took out 2007, not I don't mean numerically we didn't take out the levels, but from a Fibonacci standpoint, we took out the swings, the size of the swings from 2008, 2009 area, COVID. And like I said, and now we're bouncing from the 2022 one. But what was interesting about the 2022 one is nobody seemed to really pay that much attention to it until now. So it's a very strange market that we're seeing. And I'm just telling you to be careful out there.
Yeah. And same question to you, Bruce. Are there guidelines, rules, things that, when you're educating people in this market, they really need to keep in mind?
Yes, and I would kind of echo the same thing. Primarily the size small, always know your risk on a trade, that type of thing. I have, and to add on to one of the other questions you asked earlier, one of the things that I have changed a lot is the number of trades I have on. So in a portfolio, in a good market, a trending market, maybe I've got 10, 12 positions on, and I'm not talking about buy and hold. This is more trading type stuff. Right now, or since the first of the year, I've been either flat or had 1 to 2 positions on. So very small size, very light. I'm still up for the year, which is pretty, pat myself on the back. I've been pretty fortunate to stay but the main reason is that with the volatility we're seeing, there's no edge. There's no clear edge. So we dial it back on size, on number of trades, tighten up our stops, take profit when we can, that type thing. That's the main thing we're telling people. And I am amazed that what I'm seeing in social media and that type thing,
Yeah.
a lot of people are really talking about how crazy this is. And it is a big move. The length of time from top to where we are now is very short compared to, other corrections in the past, but it's not that extreme yet. And that worries me a little bit because I see the not panic yet, but a lot of worry, deep worry about where we are right now. And, if this does turn worse, this is just the tip of the iceberg. And I'm not saying that but I'm saying it depends on what happens with tariffs and all that kind of stuff, right? But anyway, the main thing is just size, appropriately until we get out, some clarity in the market, some direction. It doesn't matter if it's up or down. We can still make money in a down market. But right now we have neither clarity or direction. We're just all over the place.
Yeah. And you brought up a good point there. I want to ask, people define a bull market, a bear market, or I should say in particular, a bear market differently. Some just say, yeah, it's down 20%, but in others,
Right.
it's almost like the way you have to trade things. There's different indicators and different ways of looking at it. So I'm curious if, and I put quotes around the word if, we are moving into a bear market environment from the bull market we've had since, October of 22, how would you trade it differently? Are there different things that you would be looking at, different indicators, that kind of thing? And I guess I'd ask you first, Tammy.
Well, the thing is, I was on an X space this morning talking, and some of these guys were kind of laughing at me when I was saying that we're in a bear market, and I'm like, listen, all of the moving averages I look at are on the side of the bears. The only bullish, charts I see are the 10-minute and 30-minute charts. Everything else is very bearish right now, and that's what I'm looking at. I mean, I'm looking for us to stay below those moving averages. I'm looking for us to continue to come up to resistance and fail. And don't get me wrong, I do jokingly say I don't like to encourage people to step out in front of freight trains because we don't know at what point you can hit resistance and start slicing through it like hot, warm butter. But what I'm looking for at this point, because we're in a bearish trend, is I am looking for the opportunities to short. And I said yesterday that I said this morning that yesterday I made some money on a great bearish setup that I had, and everybody's like, oh. All I wanted to do was buy yesterday, and that's not what I saw when the market, not too long after the market opened, I had an opportunity where I saw some timing for a high, and I had some resistance, and I got a nice short out of it. Now, the thing is I also have my lower time frame charts where I was looking at price support where we could potentially bounce, and so I was able to get out of that before we had that tear up to the upside. So that's why I am saying, we are in a bearish market. That's what we're looking for right now. We're in a trend, but also hold on to your hat because you never know when you could get one of those face ripping rallies and it's unstoppable. So be sure to use some triggers or indicators to show if a zone's going to hold or not, and place those stops. If you make a bearish trade, that's awesome because that's the trend we're in. But place those stops just in case something were to happen. Don't get up and go get a cup of coffee if you're trading futures.
Yeah,
no going to the bathroom. None of those.
Bruce, same question to you. I mean, is there, if you flip that sort of mental switch, oh, this is bear market versus bull. I mean, are there other types of, vehicles you're going to be looking at, options trading strategies you're definitely going to be favoring? Or is it really just, like Tammy said, it's, hey, the market one day may give you a bearish setup. I'm going to trade it, and I'm not going to think about that big picture.
It is, I mean, you have to think differently in a market like this. It's very clear if you look at the charts. We are at the moment we're in, in a bearish, obviously a very bearish trend. The bounces need to be shorted. And we did in COVID, we shorted bounces all the way down, then we bought the dips all the way back up, and then COVID was the best year we've had. Hopefully we can turn this, or make this year the same way. But again, the trend I'm using, obviously Tammy's Fibonacci work. I'm using our voodoo lines that we have, which are a combination of Elliott wave and Fibonacci. The squeeze, moving averages. I think you could trade off moving averages primarily because you can see where the failure might happen. So yes, I am trading this market differently. And the other thing that I'm not doing that I always do is, say, for example, if I'm stalking a stock, Amazon, Apple, Nvidia, whatever, and it sells off a little bit, I might come in and sell naked puts under it, catch it if it comes down a little bit more or something, or just buy the stock. And I'm not doing that now at the moment. I'm switching for risk management reasons. So if you want to buy 1,000 shares of Nvidia or Apple or whatever, it's a lot, right? I can do the same thing with a debit spread, credit spread, butterfly, whatever, and get the same bang for the buck with much less risk, limited or capped risk that way. So, those are the things that I'm kind of switching to in this market. Now, there will come a time where there are already some values out there, and Tammy and I talk about this for our kids' accounts. Maybe we want to,
Yeah.
pick up, I'm just throwing a name out, Amazon or whatever, on, buy the dip for a longer term portfolio. But we're not doing that yet. Not yet.
Got it.
I'd like to see more of a confirmation of a change in sentiment and all that stuff. And I think that will happen. We're going to have some probably news on tariffs and all that stuff. It might change this whole thing altogether. And one last thing I think we will see, I know we hadn't gotten into the economic part, but I think we're going to see some rate cuts that are unexpected,
Yeah.
and
Yeah.
that can
Okay.
change everything. So
Yeah, absolutely. I guess, outside of the stock market or anything that's looking, more bullish to you, bearish based on your technical analysis. I mean, obviously gold is a market that, with everything else hit new highs, it's pulled back. I mean, is there anything out there that does look really attractive, or is just kind of, play things small and I'm not really seeing a lot of great long side opportunities?
Well, as far as gold is concerned, and like you said, this is Tuesday, April 8th, but Monday, April 7th, which was yesterday, I did have a setup on my gold daily chart, which it bounced from the 29.72 to about 74 area, which does correlate with the 50 SMA. It did have a nice bounce. The only problem is now I do see it pulling back. And if we go through the 786 retracement, which is at 29.84 of this swing up, then we'll either take out yesterday's low or make a deeper downside correction. And as far as gold is concerned, when you're just hearing what other people think, um, for the most part, a lot of people are kind of starting to, I feel like, say that they think that the the huge rally in gold is over. We may see some much deeper downside corrections now. I don't know. We'll have to see. All I can say right now is we're still above the 50 SMA. The only thing I'm looking at that's a negative is that my 5 EMA has crossed below my 13 EMA. But for right now, I like that level that's correlating with the 50 SMA, and we'll just have to see if it holds up. But yeah,
Got
gold is looking good. I actually recently that's really the only honey badger that I'm kind of looking at right now, which really isn't a honey badger because it usually just does the opposite of the market anyway. But I did give a great short setup on some bonds for some of my clients. So, yeah, you've got those things that, you can look at besides just those main indices to see what they're doing. Um,
Yeah, Bruce, same question to you. Anything that does look attractive? I mean, if we're in a bearish stock environment, any other asset classes or other things that you're kind of looking at or stalking here?
yeah, oh, absolutely. So the best thing to do or that I've done is gone back and, because I've traded through all these big ones, 9/11, all that kind of stuff, COVID, housing crisis. And you go back and look and see what performed during those times of stress in the market, right? So it's the usual suspects. It's utilities, financials, consumer staples, you want to buy the beer stocks and the soup stocks and, stuff like that. But I'm not at that point where we're loading up a whole portfolio because doom and gloom, we're not there yet, and hopefully we won't get there. But so the stocks that perform well, in a down market, defensive names, of course, pretty obvious there. And I've actually got a list of defensive names kind of prepped and ready to go. But also kind of dipping into commodities a little bit more than normal. Luckily we have the ability, um, corn, wheat, gold, copper. It doesn't matter. Copper is actually pretty good. Coffee, whatever. And we can do any of those type things. Bonds, I'm actually a fan of bonds. If we do get more rate cuts, bonds are going to be a good place to be. So, and in one of the larger portfolios that I manage, I've been trimming stocks and buying bonds in that portfolio, and I can flip it the other way if the cloud's clear and everything's great. But you just have to be systematic about it in a market like this.
Yeah, absolutely. And that kind of brings me to a question I'm going to wrap up with here. Both of you are going to be joining us for the Money Show Masters Symposium in Miami in mid-May. Really excited to see you in person again.
Yes.
Tammy, your presentation is slated to be on Fibonacci time and price and how it can help manage risk. And Bruce, you were going to be talking, or at least again, when you set this up, options butterflies. Anything you want to just briefly, without giving the store away here, just tell people what it is they're going to learn by joining you and watching you there in Miami? I guess, Tammy, you first.
Okay.
Yeah.
Basically, it will just help you to better define your risk. So, whenever you use the Fibonacci time and price, especially when they come together, it's a great place for you to be able to say, okay, if it goes through this, then I'm out. Or, hey, if it goes above this, then I'm out. So a lot of times in my trading room, that's what I'll say to clients is I'll say, put the stop here. And of course, you always want to give it a little bit of wiggle room, but that's really what you're looking for with my work. And I don't say, it's the only thing you want to use. I say it's the hammer or the screwdriver in the toolbox. Okay. So you've got your box of tools. This is one of the main tools that you're going to use. And then maybe have a few others that you like to use whenever you're setting up those trades.
Great. And Bruce, yeah, same to you. I mean, do you think you're still going to stick with talking about butterflies, or is there something else more compelling that you think, given what's happened in the market, you'll probably be covering?
It's funny you mention that. I think it's probably more relevant. I like the butterfly trade, and I'll give you a practical example. So today, again, April 8th, I checked yesterday and this morning, I watched the gamma strikes of the market. The largest gamma strikes, $2-3 billion, were at SPX 4,800 and 5,400. So this morning I put a butterfly at 5,400 and I structured it so that I got credit for it.
Yep.
So it's a broken wing. So yeah, that's what I'm going to talk about in the class is how to, if you have an idea or a concept of maybe we go here, maybe we go there, I'm going to look at here's the different ways you can set up butterflies and maybe the most cost-effective way to do a butterfly one way or the other. And it doesn't matter if it's up or down. You can do it on the put side or the call side, but very relevant because the butterfly is a super handy tool. I call it the duct tape of trades, because you can use it in any market, any volatility environment, any width. You can dial the risk up or down any way you want it. So yeah, that's what I'll be talking about, and that's what I think is probably more useful in a market like this.
Well, now we covered duct tape, we covered screwdrivers and hammers.
Exactly.
I feel like I gotta go to Home Depot or something now. In any event, listen, Bruce, Tammy, thank you so much, both of you, for joining us. Viewers, if you're watching this, Tammy and Bruce are going to be joining us again for the MoneyShow Masters Symposium in Miami. That's May 15th to 17th. You're definitely not going to want to miss what they have to say, given the importance of risk management in a market like this. You'll find event details in the description below, and you can even click there to register. Again, thank you so much, and best of luck to you.
Thank you for having us.
Thank you.
Good to see you. Take care.